Hi everyone and welcome to FX Evolution's technical analysis wrap on Friday the 17th of April. So we've had a pretty good week on the movement front. A lot of the pairs have started to move in the directions that we, wanted to. They needed to move away from their support and resistance zones that they were all tracking towards at the end of last week, just before Easter. And we're starting to see some good moves on a few of the majors. So we jump straight into the charts and check it out. See here on the Aussie chart, we start on the daily where we can see that nice big candle that engulfs basically the previous solid day. We've had 2 days of selling on this since the Wednesday night webinar. You can see here that we've had a pretty good sell-off. It's come down the best part of probably nearly 180 pips, which is pretty good. It probably went up a little bit higher than we expected, the Aussie. Like it was certainly projecting up, but it probably went a little bit higher than we thought it would. It's come back down now. Look, it's found a little bit of support in this area, probably in the middle of nowhere really. I wouldn't have expected it's going to find a hell of a lot of support there. So more than likely, it's going to find either come down to the 20 now and probably find a good support base and potentially bounce off that, or failing that, what we're probably looking for is a retest of this zone here. So you can see that this would be the logical place for it to come down and potentially start its projection up again. I don't know if it's over. There's a fair bit of stimulus going into the US at the moment, so US dollar strength is probably not the hallmark of what we're talking about today. So it wouldn't surprise me to see this come back down, touch this level here and bounce off, and potentially touch the roll reversal zone here at around that sort of 67. Now I know that's a big move. And it certainly wasn't something we would be expecting from the Aussie, given that we expected it to be in the mid-50s, but we always trade what we see. So, failing that, if it does break this level here to the downside, obviously we're going to start, our trajectory down to probably the low 60s and high 59s again. So that's probably my preferred trade on this one. I'm not really keen on it going up here because, quite frankly, the central banks don't want it there. So, I could definitely see it breaking this 20. So probably keep an eye on this one. In the middle of nowhere at the moment, but it needs to either come back and touch this level here to go long, or break this level down here to go short. And we need to close on a daily candle to confirm that. Okay, we'll move on to the US dollar CAD. It's had a nice big move the last day and a bit. We can see here that it was definitely coming down at a pretty reasonable rate. We thought it could potentially touch this zone here if it was going to continue to sell off, but obviously the US dollar strength kicked in, which is starting to sell off the major pairs, the euro and the Aussie, as we just saw. So we can see that big candle basically represented that. The CAD's an interesting one because realistically, it's technically in a lower high, lower low pattern now. You can see that it's starting to do that. So really, we probably wouldn't be doing a hell of a lot with this until it either breaks this level here and makes a new high, or breaks down to the low level. But it needs to break this 50 moving average at the very least for me to be convinced that it's going to go short. And if it does go short, it's probably going to go into these levels here. So it's sort of around that 135. Bit of work to do there. I think my preferred trade on this one is still the long, but we want to see probably another higher low form and then basically change this trend, because we've definitely got a change of trend here on the daily. So I want to be seeing that in reverse before we start to get excited for the longs again. And then potentially take it into the sort of 145, 146s again, which I think is probably where it will more than likely go if it does make this higher low sequence, because I think this trend does want to continue up, and especially with what we're seeing on the other major pairs, it does make sense for this to get back up to these levels again. But of course, we've got to wait for that change of trend. Okay, we'll move on to the US dollar Swissy here. This is the one that just keeps hanging around this level. We've been talking about it for weeks and weeks. And it's been a trading bonanza, really. It's been in between the ranges that we want it to. So it's been a pretty easy scalping trade. Nothing's really changed this week in terms of what we're looking for. We still want the small scalps in between the solid ranges of support and resistance, because they are proving to be quite valuable and working out quite well. So this is no different. So you can see here that obviously our next target is going to be the 200 if we're going long. There's no clear trend in place. It's obviously a very sideways market, so it makes sense to aim for these key levels around this 200 here is obviously a level that you can see. We've got the yellow horizontal line drawn. That would be the target if it does break the 200. Could certainly get there around that sort of 98.50. But failing that, if it comes back down and touches this sort of 96.20 area, you're probably looking for longs again and trading within this range. So wouldn't be doing nothing with this one until it actually breaks a serious zone from a long-term standpoint. But from a scalping standpoint, going for those sort of 50 to 100 pips, or even less probably on this one, you'd be happy with 40 to 60 probably. At these key support and resistance zones, sell at the resistance, buy at the support until it tells us something different. But it has been quite a good scalping trade in it, and the stochastic signals have been behaving themselves. You can see here that it sells off at the appropriate areas and buys up at the appropriate areas, and it's been doing that for quite some time. So you can't go too far wrong with the scalps on the US dollar Swissy. Okay, we'll move on to the US dollar yen now. Look, this one is, it's been a little bit the same. It's been threatening to break out, but hasn't done so. So we continually stick to the key levels again. It looks like we could be potentially getting a double bottom here. Double bottom not in the direction of any particular trend though, because obviously this is a fairly sideways moving pair at the moment. But it definitely is a double bottom that you could definitely identify. Again, a double bottom, when you haven't got the trend in your favour, isn't going to excite me anywhere near as much as it normally would. So it's certainly one to keep an eye on. It's got a little bit of work to do to actually play out anyway. I mean, at the best, it's going to have to come up and break this zone here. And to do that, it's going to have to break this very significant roll reversal zone at around that sort of 108.50. So it's got a little bit of work to do before it does that. The logical trade for this one, is either trade it into the 108.50 and then potentially reassess your options depending on the smaller time frame strength, or wait for it to break to a new low and short it to the support zone here at the 1.5. So we need to see at the very least a daily candle break below this level here. Then it would probably more than likely aim for the 105. But in saying that, it's got a fair bit of work to do. If we draw a horizontal line, at this level here, you can see that is a fair bit of resistance and good support here. So even if it does make a new low below these two troughs here, it's got a fair bit of work to do right in front of it, and we don't like that. So what we want to be seeing is probably a break below the 106.50 on a daily. If it does that, then I'll believe the story that it can go down to the 105, which is still another good 150 odd pips away. So certainly good trading there, but at the moment I'm not keen on a particular direction on this one. Just trading the roll reversal zones and the key support and resistance zones, and just going for the scalps. So nothing's changed on this one either. All right, we'll move on to the S&P 500. This is fairly early in the morning in Melbourne, so New York is still about an hour and a half away from closing. So we can see here that we've had an interesting couple of days. We've had a very good move. There's no question about that. The 2 candles ago was negated basically, although it's not a completely engulfing candle. I'll blow that up and have a better look at it. It's not a complete engulfing candle, but it's very close. And look, like I say in a lot of the teachings, although it's not a complete engulfing candle, you've got to read what the candle price action is telling you. And we do know that although it hasn't engulfed the previous candle completely, the buyers and the sellers have definitely had their little war, and the sellers definitely won it. They reversed basically the complete move of the previous candle. And depending on where this one closes today, and obviously tonight in the US market for the last one for the week, I would probably be thinking this is starting to run out of steam. Stochastic certainly indicates that it is. We've got class, we've got some sort of divergence here. Not the best divergence, is class. Class is probably the weakest divergence there is, but price action is telling us that it has weakened a little bit. So the obvious target is the that sort of 26.15 area that we can see here, marked by this horizontal line. If it gets there, we'll be looking for a roll reversal on a smaller time frame to continue the potential trend and run up. But this is at a very, very solid. I'll take it out a little bit, and you can see it's at a very, very solid resistance zone here. You can see there's a lot of traffic in front of it. So it's going to take some serious movement to actually break this zone now. So, that in mind, I'm a little bit keener on the short than I am the long on this particular indices. So yeah, looking for a candle close below this level here, looking for opportunities to short it into the 26.15, and a break of that is going to see it probably test the 25s and potentially a whole new low, which is what a lot of very good experts are predicting for this particular indice in the coming weeks. So certainly one to look out for. But the bias here is on the short after that candle. Look for a break to the downside here on a daily chart, and we'll be off to the hopefully 2600 area. All right, we'll move on to gold now. So gold, we've got the gift that keeps on giving, has still provided all of the trading opportunities we've hoped for this year, still making a series of higher highs and higher lows. A lot of people woke up to a surprise earlier this week to see it up at these levels. Obviously, people who have been following us shouldn't be surprised. We've been wanting this for a little while. It's finding itself at a pretty key zone now. We wanted to probably come back down, test some of these previous highs for a bit of a roll reversal zone to get in. If you're not already long on this one, you've got to wait for some sort of a confirmation that it has going to continue long. We either want to see a touch of the 20 moving average, which could happen fairly quickly, even though it looks like it's far away. That could happen fairly quickly, or potentially a small time frame change of trend, maybe on a 15-minute or a 1 hour to start to go long. It's had a little bit of resistance around here. We can see these two big rejections on these two of the last 3 daily candles. So, look, it's certainly finding resistance there, and it's at the top of the Bollinger Band, but for all intents and purposes, a signal line in the moving average doesn't indicate that it's slowing down anytime soon. And what that's telling us is obviously the moving average is the 12 and the 26, which is what the MACD is based on this indicator, is they are spreading. So the histogram's getting bigger, which means the 12 is accelerating away from the 26. So momentum is certainly still there with gold. So one to keep an eye on, but yeah, definitely look for potential longs. Wouldn't be shorting this one because there is no reason to do so at this stage. All right, we will go to probably the euro will be the last one that we'll look at today. The euro has pretty much replicated what the other majors have done in terms of US dollar strength. You can see we've seen a lot of weakness against the US dollar, so it doesn't surprise us to see that this has broken down to a new low. Look, it's an interesting area for it. There's a lot of congestion in this area on the euro. It's certainly printed now a lower high and a lower low on a 4 hour. This is a 4 hour chart. I'll put it to a daily actually, so we can compare it to everything else. You can see that obviously that was that same engulfing type candle that we saw on the Aussie, so it's mimicking pretty much what it's doing. But when we go to a 4 hour though, you can see that we've got a change of trend. We can see that we've got the lower high, lower low sequence. Look, an obvious target is probably this little mini double bottom that happened here. This is a very key roll reversal zone for it. It was resistance here. It was support here. So we would expect that this level again around that sort of 107.80 area will provide a reasonable amount of support for it. So if it gets down to there, still not picking a direction on this one. Looking for probably some consolidation in these support resistance areas, trading the scalps between the important zones. So I'd probably be looking for long opportunities if it gets to this support, and shorting opportunities if it gets up here again at the and being pulled up at this level here, sort of that 109.80 to 110 level, which is also the 200 moving average now on the 4 hour. So when you're looking for scalping, you want to be looking for those smaller time frames. So 4 hours are a really good option because it gives you a good prevailing trend, and then you can break down to the smaller time frames to pick your entry points and get the most out of it. So I hope everybody's had a great week's trading. We've had some pretty good moves. Hopefully some of you have caught them, and we're going to get some good opportunities in the coming days. So we'll keep an eye out on the market moves today, and we'll report back next week and hopefully catch you all at the webinars. Have a great weekend, guys.